Jay Kaplan, one stock you like in the Royce Small-Cap Value Fund is Matrix Service Company. Stock's down around 8.5% so far. They make things for the oil and gas drillers. They revised their guidance back in early February, but the stock's made a pretty good comeback since then. Why do you like it?
Well, we like it because they do a lot of work with gas storage, liquefied natural gas, refinery turnarounds, chemical plant turnarounds, the electrical subsystem work. There's a big backlog of work that's coming. The street thinks it's really just an oil and gas drilling company, so they trade it like an oil stock, but it's much more than that. So we think that when people see through that, or if energy prices go up, you won't have a 10 multiple anymore.
All right, well, speaking of turnarounds, you also like Moelis Company. Now, they do a lot of M&A, but they also do a lot of turnarounds. They're a turnaround advisor. Stock's down around 10% year to date. Tell me about this one.
Well, they're an independent M&A boutique firm. They have a big mergers and acquisition business. That business is slowing down a little bit with market volatility and widening spreads and trouble in the financing markets. But on the other side, they have a big restructuring advisory practice. So as things get tough, as we see bankruptcies, we're seeing a lot of distress in the energy sector, the restructuring business could pick up. You get a really big yield, lots of insider ownership, and it's one we like a lot.
All right, another stock you like is DSW. They're in the shoe business. Stock's down around 8% year to date. Got a lot of downgrades last week. A lot of the analysts on Wall Street don't like their merchandise. Why do you like the stock?
Well, you know, shoes have been really tough. Christmas was awful. The weather was terrible. There hasn't been a really good shoe fashion cycle in a while. So there's been a lot of inventory. Prices have come down. Clearance is up. Margins are down. They're spending a lot of money on omni-channel. That depresses the profits for now. But we think one of these days there'll be a hot shoe again. Santa Claus will come back. We'll have a good Christmas again. There's lots of insider buying. You have more than a 3% yield, and I think the stock can work. I know the street's negative, but for value investors like at the Royce Small-Cap Value Fund, we like that.
All right, and then finally, MYR Group. Stock's doing very well in 2016 so far, up around 20%. They provide electrical construction services to a lot of companies. They missed on the bottom line last week, but you still like it.
I do. They string wires for the electric grid, and they do electricity in things like airports and big arenas. It's been a tough business. A couple years ago, business was great. There were lots of big projects. There's been a lull in those big projects, so profitability's come down. They have a lot of equipment that sits in the yard. It's not being used right now. But it looks like the grid is going to continue to get rebuilt. There should be a lot of activity. And now we have some shareholder activists circling around. They don't like the fact that there's a lot of equipment and the company's under leveraged. So the company just announced an aggressive stock buyback. And I think that's why the stock's reacted. It's a cheap stock, great balance sheet. We think it'll be a big winner.
All right, Jay Kaplan, thanks for coming.
Thanks, Greg.
And thank you for watching The Street.